Okay, have you done the homework? Do you have any doubts?
I completed till seventh class, and working with that, I will share it once I done it. I'll start forwarding the chart, sir, once I
Okay,
prepare, sir.
today we will start with dynamic support and dynamic resistance. So till now, what we had studied is horizontal lines, as the support and resistance. Second one is trend lines as support and resistance. So horizontal lines were like this, exactly to the highs and lows, highs and lows. Trend lines will be always inclined towards upside or downside. Based on the connection, the inclination is upside when you are connecting to the lows and highs like this, and inclination was downside if you connect to the highs and lows like this. So these were the two types of supports and resistances till now we have studied. Now we are going to study dynamic support and resistance, in the sense it will be keep drawing supports and resistances based on the changes in the market. The tools which we use for dynamic support and resistance are moving averages. What is moving average? Moving average is a average taken from a set of candles. So we always drawing moving averages with the different values. Say the value varies from 5 to any number, 5 to any number, 5, 6, 7, 8, 9, 10, whatever, any number, depending upon the analyst in which he is using for his convenience. So moving, how the moving averages will be formed. See, we are taking, suppose this is the days, day 1, day 2, day 3, day 4, day 5, day 6, day 7, day 8, day 9, day 10. So we have 10 trading days, and on 11th day, I need the moving average for that day. The moving average for that day. We need moving average for this day. So how to calculate? So it depending upon the what value of moving average you need. Whether you need last 5 days moving average or last 10 days moving average. This is nothing but average of past 5 days. Average of past 5 days. This is the average of past 10 days. Say suppose the value here is 10. The value is nothing but closing prices of the share on that day. So this say this is 10 rupees, this is 15 rupees, again this is 10 rupees, this is 20, this is 25, this is 30, this is again 30, this is 25 again, this is 50, this is 35. Now we have 10 days closing prices. This is the closing prices of the share. Now you need on the 11th day moving average value. So which value you need? Say suppose you need 5 days moving average. In the sense, you go back previous 5 days. 1, 2, 3, 4, 5. Recent 5 days values. Add all these 5 days values. You get 60, 85, 50 is 135 and 35, 170. Divided by number of days, we added 5. So this is the value. 30.4. 30.4 is the average. So today, previous 5 days moving average value will be 30.4. And if you want 10 days moving average, then you are going to calculate all the 10 days, add previous recent 10 days and divided by 10. So what is this? 20, 45, 55, 60, 70, 80. Add. So the total of this is 250 and divided by 10 is nothing but 25. So 10-day moving average value will be 25. 5-day moving average value will be 34. So that will be plotted on the same chart with a dot on the day. That day, the value is going to be plotted as a dot. So say suppose this 10-day moving average value is 25. So it will be sure it will be below the 5-day moving average value because this is 30.4 and this is 25. So definitely this will be here. This is the 10-day moving average and this is 5-day moving average. Say this is today 1 day, and what will happen in the chart? Chart itself is going to keep drawing these values every day itself once you plot the moving average. Say suppose if you add a 5 moving average to the chart, it will be keep calculating and drawing these points every present day with the previous 5 days values, 5 days average values. So what will happen? Every day you will be getting one dot continuously. It is dynamic every day based on previous, because every day close will be dynamic. It is variable. Hence, the values generating here also variable and dynamic. So it will be plotting like this every day as a point. And what will happen? These points will be joined as a line. And then it looks like a line. So every current day's value will be the average of previous values. So I will show you this in chart. Say if you must go to the indicators, and there you must type moving average or average. So there you will get this option. If you click on that, you will be getting this kind of pop-up. There you must give the value of moving average you are looking for. So suppose you need 20 days, you must give 20. If you need 100 days, you must give 100. I will tell you what kind of number you need to use in the moving average. We are going to use specific number for the moving average that we will discuss later. But whatever the value you need, you must give the input here and press OK. Then that will be plotted like this. That will be plotted like this. All these values are dots. Say today this value is generated or calculated by average of previous 20 candles, because the value of this moving average is 20. Hence today's value is 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20. 20 days closing divided by 20. This is the average of today's value. So every day will be, the line will be keep extending dynamically. Hence we will call this as a dynamic moving average. The chart itself, it will be drawing this line. So now you understood how the moving average will be created.
Yes, sir. Yeah.
Yes.
So here, what would be the interpretation, sir? Like,
I will tell you
if
later.
this.
I will tell
Okay.
you.
Okay.
So here we are going to use different kinds of moving averages. So generally we use simple moving average and exponential moving average based on the person who is doing analysis and the comfortability of the analyst. So what is simple moving average? Simple moving average is nothing but the average of previous n number of days, the sum of n number of days divided by total number of days. This is simple moving average. Then what is exponential moving average? It is same. It is same. Sum of previous n number of days addition divided by total number of days with the value of exponential. Now, what is the difference between these two? See here, simple moving average will be calculated and plotted, and the response of the simple moving average is very too much of dynamic and too much of movement. It is called too much of noise. We can call as a too much of noise. When you come to the exponential, the noise is avoided. All these fractions are generated after the number will be round figured. Then what will happen? The number will become round figure and values generated will be noiseless. It will be noiseless. If you take 20 moving average, 20 simple moving average, and if you take 20 exponential moving average, we call it as a EMA, we call this as a SMA. The plotting is very different, and you can see a lot of noise in the moving average, simple moving average. If you see the 20 exponential moving, the noise is very less. The noise will be very less. So let us see it in the chart. Say suppose this is the 20 moving average we added. This is the simple. MA means always simple moving average. And I will add one more moving average right now. Which is 20. Let us give the different color. You can see here, this one is 20 SMA. And red one is 20 EMA. Now you can see the difference. It is very far. And you can see this is very close to all the candles. For this reason, it gives more preference to the recent closing values. EMA. If you wanted to know about the price action of recent closing values, you must use EMAs. If you just need a simple moving average, you can use SMA. Did you understand the difference? Why it is plotting very near? It means the preference of the nearest closing values will be higher in the 20 EMA. But here it is a generally average of all the candles. That's all, simple. So there is a lot of difference between both. You can see it is very nearer. It is very nearer. There it is very nearer. And if you consider this is very far. Here it is also far. Always EMA is going to be very nearer to the candles.
So always we have to consider exponential moving average price to
No, it is
determine
not
our
like that.
values.
It is not like
Okay.
that.
Okay.
I told you it is based on the analyst who are using. These are the two kinds of tools. You might create your own strategy using these tools. Okay, it is up to, it is like custom made. If you wanted to make your custom strategies, you can use EMA and create your own strategy. Generally, everybody use simple moving average. You can also use EMA, and you must get adapted to this. I will show you the differences. Now, what are the general values we are using? Moving average. We are using moving averages to understand the average value, average price, which is trading in a specific number of days. To understand the average price traded in specific number of days. It means we will get some kind of input by understanding what is the average value, average price it has traded in. Suppose what is the average price traded in previous 5 days? What is the average price traded previous 30 days? What is the average price traded in previous 60 days? Like this will give us some kind of idea to create our strategy to use it in the analysis. Now, generally we use moving average as a support and resistance. Support and resistance. How? It means, suppose a previous 5 days or 10 days, say 10 days, the closing prices of the share will be 100, 120, 110, 115, 125, and so on. And the average of this will be 110. So this is the 10 days average, previous 10 days average. So suppose today the price of the share is trading at 85 rupees. It means something is wrong. We can understand earlier 10 days it was trading at 110 rupees in average, but today it is trading at 85 rupees. It means something wrong has happened. We don't know what is that wrong, but something wrong has happened. That is the interpretation. So earlier person A was taking 15 lakh per annum salary for 10 years. And recently his package is 8 lakh. What does this mean? You will get some kind of interpretation. Say he might be fired from the recent company due to some mischiefs he has done, or some kind of fraud has happened. So because of some mistakes of him, he is not getting a good hike in the upcoming companies. So hence he is working for the lower salary, right? So definitely you doubt on this person, not on the company, right? Suppose his earlier 10 years package was 15 lakh, and recently he is working for 25 lakh this year. What is your interpretation? Definitely his performance is good, hence the good companies are hiring him and paying higher salaries. So definitely your interpretation is the performance is good here. When you see here, you definitely interpret as the performance is low for this person. You don't need the reason why he got fired or why he got paying very less. What is the conversation happened with his boss when he is dying, nothing. You don't need all those stories. Just by looking at the current salary, you can interpret something, but that is true. So that is how we are going to use moving average. Suppose it depending upon the different people with a different mindset, and he can use 10 days moving average, 20 days, 50 days, based on his strategies he formed. Strategies he's formed. So here, what should be the values we must use? We are going to use 20 moving average. This is a simple moving average. I'm talking about simple moving average. We are going to use simple moving average with the value 20. We are going to use simple moving average with the value 50. We also use 100 moving average. We also use 200 moving average. So we are going to use 4 different moving averages to find out dynamic supports and dynamic resistances. Why we are using specifically 20 moving average? Because we have 30 days in a month, but only 20 trading days in this month. So usually the holidays will be excluded because it is very rare, but generally we will get 20 trading days in a month. Hence we are going to take the average of 20 trading days. This is point number 1. And why 50 moving average? So here we are going to take the average of 3 months. So after all this, all the general holiday and some holidays, we are going to get approximately 50 to 55. So we are using 50. So little difference does not matter. Hence we are using 50. So this gives 30 months, 30 days average. Sorry, not 30 days, 2 months average. Oh, sorry, 3 months average. Because 3 months is a 60 days, 60 working days. We are counting 60 working days. Now here 100, same concept, and 200 is same concept. When you are using medium term analysis, you are going to use 20 and 50. What is medium term analysis? In medium term, what is the trend of the stock? To understand the trend of the stock, you are going to use 20 and 50. If you wanted to understand long term analysis and trend, you are using 100 and 200. So here, why you are using 20 and 50 for medium term? Medium term means for recent 20 to 50 days, what is the trend of the stock? You need to understand the recent trend of the stock. Hence, you are using the recent values, recent 20 to 50 days values. So if you wanted to understand the long-term trend, then you are using 100 and 200. Let us go to the chart and see. So this is the 20 moving averages, 20 simple moving average. What is the simple interpretation here? Simple interpretation. Today, say suppose this is the current day. The current day is trading below the average. This was the average. Previous 20 days closing divided by 20. And this is the average. And price is trading below this average. What is your interpretation? Price is not performing well. Share is not performing well. That is the reason it is trading below that. It means it is weak. So share price is weak right now. I will give you an example. You have a land in your city, say in Bangalore. In 2000, square feet value was 1000. In 2005, it was 2000. In 2010, it was 3000. And 2020, it is 5000. And every 5 years, it is keep increasing, and the average will be always higher than this. So now you can understand there is a boom in the Bangalore for the real estate. This is the interpretation. Suppose it was 3000, now it reduced to 2500 and 2000, then definitely average will be above this. Then you can say the land value is falling in the Bangalore. Nobody is there to buy. So this is how interpretation will happen. If the value current price of the stock is below moving average, it means the stock is weak, is the interpretation. If the price is above moving average, it is strong, simple. Here it is strong, it is weak, weak, strong. Even it is going up, if it is below this moving average, it is a weak, consider as a weak. Now let us see some of the stocks. Now tell me, where did you bought this stock? What was the price you bought?
Sir, this 5,900.
5,900, around this area, right?
Correct, correct.
So after that, what has happened? The price went below moving average, right? When this went below moving average, it become weak. And every time it was keep falling down. It was keep falling down. Here it tried to come back to the strong zone. It did not sustain. It goes below moving average. Again, it become weak. Now, what is happening? Currently, it is trading on moving average. See, there are three things. Trading on moving average, trading above moving average, trading below moving average. So if it is below, it is weak. Above, it is strong. It is sideways. It is sideways. So there is no use of taking trades here. This both will be useful. Because here we can go for buying, here we can go for selling. So this is how moving average will be predicted. Now suppose how moving average will act as a support and resistance. So we were treating this as a dynamic support and resistance, right? Now let us see how this is going to act as a support and resistance. Suppose this is the moving average. Price broken moving average and went upside. And at some instance, price becomes weak and it will try to come down. It will start to fall. When it is falling, when it reaches to the average or nearby average or just little below the moving average, then there is higher chances it bounces back. It bounces back like a ball. Bounces back like a ball. Then it acts like a floor. Moving average acts like a floor. So when ball is falling and if you get the floor, the ball will get bounced. We just use this to know the specific location of the bounce. That's all. We don't know whether it is how much it is going to bounce or whether it will reverse from here and go still higher. We don't know that. We are just using the floor to understand the ball will come and bounce from the floor. That's all. This bounce we are going to get benefited. Make benefit of this bounce. That's all. You apply your strategies and get benefited from this bounce move. So likewise, we are using different moving averages 20, 50, 100 and 200. Now suppose
So for trading purpose, we don't have any standard consideration, right? Like 20 days, 50 days. Which one we have to consider here, sir?
I'll tell you. Now price was trading here. This is moving average. Now it was trading higher and now it broken the moving average and came down. Again price tries to go up. When it approaches this, it acts as a resistance. It acts as a resistance. So it will hit the top and it can take a U-turn from here and come down. Now what we do is we make use of this down move and this reversal area. Now it is acting as a resistance. Earlier it was acting as a support. Now this acting as a resistance. When price is below moving average and price try to reach the moving average, then this offers resistance. When price is above moving average and price try to go down, then this will give you support. Now here you can see when price is down, when price approaches moving average, it takes resistance and it will come down. Again, it tried to go up. It took resistance and came down. See, all this happened when price went up and reaches to the moving average, it took support and went up. Next time broken down. You can see, we will see some different TCS. Here you can see price broken, went upside. When it is reaching near to the moving average, you can see some bounce. This broken down. Again, when it goes to this area, pull back. Again, this is sideways. Again, went up, took support, went up, broken, went up, got resistance, came down. Again, tried to go up, got resistance, came down. Again, went up, got resistance, came little down, and price forcefully went up, broken the moving average. Now, when it comes down, it should offer the support, but it did not offer. Then it means it become weak. Hence, it broken and came down. Now, when it is weak, when it goes near to the moving average or touches this, it will offer resistance and it will come down. Again, it offered resistance and it come down. Now, here it tried to go up, but again not able to sustain, came down. Again, it is offering resistance right now. You can see price is falling when it is touching this. So this is how we are going to use moving average. So this is 20 days moving average. Now let me plot 50 days moving average with this. $50 days moving average. This is the 50 days moving average. You can see the price is trading above 50. This is the 50 and also above 20. So price is trading above the average of 1 month and also above the average of 3 months. What does this mean? From 3 months, the price is trading above the average. It means very strong. Very strong.
And this will indicate to buy, right, sir? Now.
Yes, yes. If it is strong, what you will do? Right. The growth of the site value in the Bangalore is very strong. What you will do? You will be just buying. That's all. If the growth of the land is not so much good in the Bangalore, what you do? You just sell it. If you have, you just sell it and you go and buy somewhere else. Or if you don't have any land, you are just avoiding to buy it. Simple. If you have it, just exit it. If you don't have it, simply don't buy at all. These two actions you can take. If it is weak, it is below the 30, if it is below the 20 and also 50, it means very weak. When it is between two, what does this mean? it is intermediate sideways.
Okay.
It is sideways. Now I will plot 100 and also 200. Now you can see prices here above 200, above 100, above 20 days, above 50 days. It means very strong. That is the reason for this much of movement. So if you take from 200 to 20, this means you are going to calculate the strength between 200 days, in the sense every week 5 days, every month 20 days. So you are going to calculate 10 months, the average of 10 months. So from 10 months itself, price is higher than the average itself. Some kind of information, that is, it is stronger. Now you can see price is just above 10 months, but below all the recent months. So intermediate downtrend, long-term uptrend. Here, price is here. Long-term weak. Weak because it is below 10 months moving average. That is 200 moving average. It is weak. How much weak it is? It is weaker than 10 months closing, 10 months price. When it goes on to the moving average, it is sideways. When it goes above all this, again it is strong. Again it is strong. When it is trading on all the moving average, too much sideways, too much sideways. And you can see here it is below all the moving averages and become weak, and the weakness followed. The weakness followed. Just a minute. Now, till now, have you understood the concept of using moving average, the reason behind using moving averages?
Yes, sir. I understood now. Uh, the when we are purchasing it, it should be above moving average price. Then we can say it is a strong indicator.
Yes.
If it is in between, then it is sideways. If it is below moving average price, then we should be caution. We should not buy it
Yes.
till it reaches or crosses the moving average price in a strong manner.
Yes. If the price is above all, your grandfather was using $10. Okay. And your father was, his son was using, I mean, he was earning $20 and he is earning some $30 and he is earning $40. In the sense, the recent person is earning above the average of all this. So he is strong. Now, you understood the concept of using moving average. You understood the concept of using moving average. Then how to use the moving average for our analysis? Suppose take 10 moving average. 10 moving average in the sense the average of 10 recent days. Now, if you see the moving average, if the moving average is, it is inclining towards 45 degrees. Inclining towards 45 degrees. This is scenario 1. Scenario 2. 2. Moving average is flat. Scenario 3. Moving average is inclining down towards minus 45 degrees. So what we say it is 180 and 45, 230, this is 275 degrees, I think, downside. Now, what does this mean? What does this mean? If you see the moving averages are inclining upwards towards 45 degree, what is the meaning of this? Tell me what is the
This
meaning of,
looks like uptrend
okay?
where hello.
Yes, yes, tell me.
So this looks like an uptrend and it is buy indicator.
Yes, the average is going upside in the sense every day price is increasing. Definitely, if the price is increasing means price should be above the moving average only. Every day price is increasing in the sense it is a hot and strong uptrend. So the inclination of the average depending upon the momentum of the movement of the prices. Momentum of the movement of the prices means the speed of up move. How speed of up move? Today is 100, tomorrow is 110, day after tomorrow is 125, later it is 135. This is the speed. You can see speed. It is going 10 rupees, 15 rupees, 10 rupees like this.
Yes, sir.
Suppose the price is 100 rupees 10 days back and price goes to 101. and it come to 100 rupees, and it goes to 103, again it comes to 101, and it goes to 105, and it goes to 106, and again it comes to 102, again it goes to 120, it comes to 108. So if price is moving like this is not a speed movement, right? It is not speed movement. So this is the momentum. Once it is going forward, it is going forward itself. It is not coming back. Coming back. If it is coming back like this, the steepness of the moving average will not be like this. Definitely, moving average will be like this. It will be like this. So when you see the steep moving average towards high, the inclination towards upside, it means momentum of the prices will be higher. Let us see that is in the chart. Look at this inclination towards 45 degree, more than 45 degree, right? You can see this is 45 degree and it is more than 45 degree. When it is more than 45 degree, you can see from here it was 3,300 and till it get flat. This is the, it becomes flat, right? What is the value of this? 3,800. 3,800. So 500 rupees. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 10, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. 1, 2, 3, 4. In 34 days. 34 days, 500 rupees movement. When this is the inclination more than 45 degree, right? Suppose if you see any inclination less than 45 degree, and this is also more inclination. Let us see less inclination. This is below 45, right? Now you can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23. This here it becomes flat. In 23 days, the price movement occurred from here. We are calculating 3,150 to 3,200. Only 50 points, 50 points in 23 days, and in 34 days, 500 points. When inclination was more than 45, the price movement was very fast and higher. When inclination is down, the price movement is very less. So same way, even for, you can also see here this movement. You can also see here this movement. So when inclination is flat, there is no movement at all. It is a flat. When the moving average is flat, there is no movement at all. even towards falling if the inclination of the moving average is so below 45, the fall will be more and faster. Just always understand, the steeper towards upside the moving average, the price movement will be more. It is called momentum. If the price moving averages is very steeper downwards, it is downtrend and the momentum will be very high. So the meaning how to use this moving average is, if the 20 moving average is steeper, it means recent 20 days price action movement is very fast. If the 50 days moving average is steeper, so within last 50 days, the price action is very fast. If the 200 moving average is steeper, the stock is keep rallying from 10 months without stopping. Got it? Then how can you use this? How can you use this for your trading? If you wanted to finish your trading within 20 days, you are going to trade this kind of move. If you can finish your trading within 50 days, you are going to trade this kind of move. These are short-term traders. Trading facility. Here, medium term. He can hold for another 50 days because the 50 days moving average is inclined towards upside. And here it is a 20 moving average. He can hold for 1 year as the inclination is upside. Did you understand the concept? Is it clear?
Yes, sir. Yeah.
You asked a question how to use this in the trading, right? So this is how you must adapt to this moving averages based on your trading style. Whether you can your trading holding period will be 10 days or 20 days or 30 days. So based on your holding period, you must look at moving averages. You can see here, it was almost flat till now, and it started to rise here, but more inclination came here. It is very tough to get more inclination towards upside with a higher value moving averages like 200 and 150. A higher moving averages, it is very rare that it will get higher than 45 degree. So now it is almost 45 degree. When it is almost 45 degrees, suppose leave it this part. If you have invested anywhere here, so what is the price here? 3000. 3000 is the price. Until it breaks here, it has made 4000 rupees. So where was your investment? Here is your investment. So March 21, and March 22, within 1 year, 1000 rupees profit. So 3000 to
Actually, sir, I brought this at 3,500 and sold it around 3,800.
okay. Now you can
Um,
see here the
I
return.
made 300 profit in March somewhere in this. I not invested much. I had almost 20 or 25 shares.
33% return within 1 year.
Yeah,
It has given 33% within 1 year.
including dividends. Dividend also they given good.
Yes. Suppose once it broken here is a 3600 in the May, this May. It means March to May is 1 year, 3 months. Still you are in the profit of 600 rupees is nothing but 20% return in 1 year,
Yes, sir.
right? It is
Yeah,
20% return safe. Nobody will give you 20% return.
correct.
So
Now they given target as 4,500 for this, but it will take some time because of market uncertainties.
let us
As per
always
indicator
look
also, it
at the
is going up
steepness
only.
of the moving averages. If the steepness is more, the price movement will be higher. When it goes sideways, the price will become weak, and when it turns down, price become very weak.
Sir, can you please also check CAT or Relaxo share? Relaxo.
Now you can see it was plot. If you wanted to invest long term, then only you must see this biggest 200 moving average. If you wanted to invest for a short term, just look at 50 moving average. If price is higher than 50 moving average, that is enough. And where the steepness started, this is where it started, right? Suppose if you bought somewhere here using pattern, you invested here and it went up to 1700, so 750, from 1250 within 1 2 3 4 5 6 7 8 9 10 11 12 days. 1250 to 1750, 500 rupees. So what is the percentage here?
25%.
120. Yes, 125. No,
Yeah, 20%, 20 to 25% is within between this.
1250 divided by 100, 12.5. Okay, 500 divided by 12.5, 40% return. 40% return in 12 days
Yeah.
because of the steepness of the 50 moving average. And
Yes, yes.
definitely, if it is steep, definitely the the lower moving averages will be steeper than this. Steeper than you can see, it is almost near to the 90 degrees. Almost near to the 90 degrees. This is where, see, if you wanted to select a stock for intraday or 2 to 3 days, you always look at the recent lowest moving averages steepness. If it is more steeper, the momentum is higher. Hence, we can select this for intraday or uh, smaller investment for 2 to 3 days.
Okay, sir.
So this is how you need to assess. Now it is going down.
I think it is a buying opportunity now, but we have to wait for long term. Inverted 90.
This is 45 degree, right?
Yeah.
Almost near 40. But it is not below 45 degrees.
Mm.
Hence, it is not too weak. Moving average is here. It is not too weak. It is higher than this. If the steepness is more than this or at 45 degrees, then you can consider it is more weak.
Okay.
So
This seems to be a buying opportunity, right, sir? Here.
Which one? Next one?
This one, sir. See, this is buying opportunity, right? Currently.
No, how can you buy? You can see here, price is trading below all the moving averages.
Yeah.
What you
So
will
it will
do when
further
this
fall
trade,
down or sideways.
whenever price approaches to any moving average, it will give resistance.
Okay.
When it goes to next moving average, it will provide resistance.
Okay.
You can see here.
Mm.
Finally, if you escape from all these moving averages, the higher one will
Okay.
give you resistance. Which one
Okay.
is
Okay.
the next stock?
Relax, sir. Relax, sir.
So recently it turned into bearish.
Yeah.
Recently in the March.
So this is trading at below moving average price, all moving average price.
Yes.
So we should
Here
wait here.
the steepness started above 45 degree. If you buy somewhere here at 1,000 rupees, 1,000 to 1,360, 1,360. So 36% return within May to November, 3 months.
Yeah.
Within May to November, 3 months, you got a 36%. 36, oh, sorry, 44% return.
Yeah.
Still, if you exit after this crossover, you are still will be in the profit of 20%.
Yeah. This actually, sir, this is zero debt company and management is very strong for this company.
Even whatever, there should be a support from the macro markets.
Yeah.
Macro market conditions are not good.
Correct.
Just now
And
it turns negative,
yeah.
and we are not very much confirmed whether it will be staying below this for a long term. It can come back to the positive note.
Correct.
This is right now, it is a flat. You can see long term, it is not so bearish.
Mm.
It is flat. Almost equal to horizontal line. You can see it is almost equal to horizontal line.
Mm.
Okay.
Yes, sir. Next is root mobiles. Root mobiles.
Root.
ROUT, sir. Root mobiles. This is also below a moving average price. All below moving average price. So we have to wait.
Okay. This is how you need to understand the strength of this stock.
Yeah. So we have given four indicators: 20 days, 50 days, 100 days, 150, 200 days.
Yes.
So all if it is falling all within all below or moving average price, then it will be a bearish market. Like we should wait till it breaks
If
those
it's
indicators.
uptrend,
Yeah.
if it's uptrend,
Yeah.
the lower moving average will be higher than the higher moving average. This is 20, this is 50. Again, this lower moving average will be higher than 100. And then it is 200. See, this is a 20 moving average. This is 50. This is 100. This is 200. If it is bullish, all smaller. See, 20 is smaller than 50, right? It is higher than 50. 50 is lower than 100. So it is higher than 100. So it will not intersect. It will not intersect any previous moving averages. It will be like this, separate and inclining towards upside. This is the strongest trend. When it is bearish, this is 200. It will not touch 100 and it will not touch 50 and it will not touch 20. 20, 50, 100, 200. Suppose any of these two, say suppose these two are mixing together, or any of these two are mixing together, in the sense these two trends are going to change. These trends are trying to change. Got it? These are the intermediates. 20 to 50 days trend is going to change, trying to change. Got it? If 50 and 100 moving averages is overlapping, it means the 50 to 100 days trend what was there is going to trying to get changed, whether it can go sideways or it can turn bullish. Change in the sense whatever the present trend is going to change for another two trends. If it is bearish, it can change to sideways or it can change to bullish. We don't know, but there is change is taking place when there is a overlap of any two moving averages. The overlap of 50 and 20. Overlap of 50 and 20. Overlap of all. Overlap of 50 and 20. Overlap of 50 and 20. When this kind of lot of overlaps are happening, it means the stock is not having enough strength. Lot of overlaps. See, 1, 2, and 3. So when doesn't have strength, it becomes weak. So got it?
Yes, sir. Understood. Yeah.
We also use 5 moving average, 10 moving average to look at very recent 5 days and 10 days strength of the stock. If you reduce the moving average value, it means you wanted to understand the recent strength of the price action. That's all. If you reduce to 3, you wanted to understand the recent 3 days strength of the price. Suppose you got hit by a cricket bat 2 days back. Yesterday, day before yesterday. You got hit today by a bat. It is usual that you will get third day pain. Still you have a pain. Fourth day it will reduce. Fifth day it will reduce. And sixth day it might vanish. But you will be having this hotness. And if you got hit by 5 days back, if you got hit by 5 days back, you still have a pain on the 5 days back, in the sense 5, 4, 3, 2, 1. This is the current day. If you still have pain, still the pain is not vanished today, in the sense it might have one more day. It might have one more day. The pain will continue one more day. This is how the moving average will be used. So if 3 days it has the momentum, we can expect one more day. If 5 days it has a momentum, you can expect another 2 to 3 days. You can see yellow is 5 days, red is 10 days. Where did the price close below this yellow? Here. Here. And it sustained 1, 2, 3, 4, 5 days. 5 more days below the 5 days moving average. And this is the 10 days moving average. Where does this got clear close? This one. Again, it is going to sustain 10 more days below moving average. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and it might come down again. So it shows a recent 5 days strength. You can see inclination is more here. It is above 45 days, above 45 degrees. You can see here the inclination, so inclination is more above 45 degrees. That is the reason the fast fall below this. When there is a flat movement, you don't see any price movements, proper price movements. Even you can see here, all these are the plot. So flat moving averages will not give you proper. This is a plot. There is no proper price movement here. Only 50 points. When the inclination is more, the smaller moving averages, the recent price action will be faster. So this is called momentum trading. We use these 5 and 10 moving averages for momentum trading. Momentum trading in the sense the recent price action.
Okay.
Got it?
Yes. Sir, last one trade, sir, from my side. Thermax, sir.
Max.
Thermax, not Electro-Thermax. Thermax, this is a boiler manufacturing company. Yes, sir. Below, sir. Yeah, give a second.
So long-term trend is up, but short-term trend is sideways. Short-term trend is sideways. All are overlapping.
Yeah.
Chances it can go upside only. It is not weak. With this, you need to look for the price action that we will do it later. Right
Sure,
now,
sir.
based on the moving averages, the long-term trend is higher and you have a support at 1,800.
Yes. Sir.
If
Actually, sir,
price
this is a
comes
monopoly
back,
company in this
it
area.
will give you some pullback.
Yeah.
So always when price tries to come down, you will get a support.
Yeah.
You can see price will take support always. So it is now taking supports at these medium term moving averages.
Yes, sir.
Okay. So this is all about moving averages and how to use moving average and moving average concepts. So let us finish this today. And if you have any doubts, let me clear.
No, sir. Currently, I am working with that. First, I'll complete my homework and then I will send you in WhatsApp whatever if I have any questions. I'm good, sir, right now.
Okay. Can I end the session?
Yes, sir. Please forward this recording, sir. Yeah. Thank you.
Okay. Bye.
Okay.